Finally, okay, let's move on to some more of the deeper problems in American society, to housing. Let's put this up there on the screen. This is very significant economic data. U.S. new home sales have plunged to the lowest since the start of the pandemic. Now, the purchases of new single-family homes have fallen by most since 2013. But the median house price continues to set a record as housing inventory is improving. I think there's only one culprit in this entire thing, Krystal, and that is the Federal Reserve. But the reason why that this matters is, what did we all find out in 2008? It turns out the housing market is deeply financialized, and you can say whatever you want about Dodd-Frank and all of that. It still continues to be massively financialized. Big money, big capital is moving in here. And actually, the current rise in interest rates, while yes, it will slow the housing market, I mean, how much of this is basically going to guarantee that millennials will be a relative permanent rentier class? Because if you could not afford a home during the pandemic, which obviously it was crazy, boomers were paying cash and all this stuff, but at least the interest rates were low. We're talking like 2 to 3%. How the hell are you supposed to do so when the interest rate is at 5%, which it was last week, 5.25? Increase up from 3, which is the single highest increase in the mortgage rate in modern American history.
Yeah.
And it's only gonna, look, we all know inflation is gonna be here now for years. It's for a variety of reasons, supply and all of that. And the only blunt instrument we have is the interest rate. I mean, what are they gonna jack it up to? 8%? In that environment, it's not gonna be possible. If you are a young person out there and the mortgage rate is 8%, I mean, just say goodbye.
Well, I mean, you're like screwed either way, because if the housing market continues to be extremely hot, the prices continue to escalate. And
you can't afford that.
And you can't afford it. If they jack up the interest rates, then just to give you a sense of how much this matters in terms of your monthly mortgage payment, in April, the monthly mortgage payment on the typical home jumped to almost $1,500. That's assuming a 30-year fixed rate mortgage with a 20% down payment. That's up 34% since December and 53% from just a year ago. So that's how much it matters. Because it sounds like a little, it's just lifted a couple
It's like,
percent.
no, it's hundreds of thousands of dollars.
This has increased the monthly mortgage payment by 50%. So it makes a huge difference. And the housing market is actually what the Fed is directly targeting, because it is such a large percentage of the economy, and because it is the one thing that these mortgage rates, are very sensitive to whatever the Fed rate ultimately is, whereas the Fed can't do anything about a supply chain crisis directly, so it's less likely to have as much of an impact there. There's some signs that, as opposed to previous times when the Fed has tried to use the lifting interest rates to cool the housing market, there's some signs that there's a little bit of resistance here. More buyers say that they don't really care what the interest rate is. They've decided they want a home, and that's that. Now, ultimately, when the rubber meets the road and they're looking at their payments, they can't afford it. That might change things. We'll see. But the other piece here is that so much of the housing stock is being snatched up by investors and by permanent capital that are less price sensitive, that also could make it more difficult to cool the hot housing market. Corporate and individual investors accounted for 21% of home purchases in December. That's up from 17% just a year earlier. So as we've discussed before, the fact that you have permanent capital coming in some cases buying up entire communities en masse and attempting to turn millennials and Zoomers into a permanent renter class has also contributed to just the complete inability of first-time home buyers to get into this market. And it matters a lot. You guys know this. I mean, I don't have to explain this to you, but because asset prices have appreciated so rapidly and gone up and up and up in this country, really the only way to get your foot into that sort of stable middle-class life is to be an asset owner, be a homeowner. And for the people who are locked out of that, that puts them on a lifetime path of precarity and never building their own wealth, but always lining the pockets of the landlord class.
Oh, absolutely. I mean, I can't emphasize that enough, which is that, you know, boomers are flush with cash right now.
Yeah.
From the ability to sell their houses, the ability to take loans based upon their assets, on their stock portfolios, which they're now being able to access. I mean, the amount of money that they have relative to most other young people in this country is insane and astronomical. Even when you compare how much money they had at that time in their lives versus how much money we have at this time in our life. So it's a very tough situation. And the worst thing is what did we all learn from '08? When the housing market flips, it took what, a decade, 12 years to come back? I mean, if you're on the older side of millennials, you're like 35, 38, something like that. I mean, 12 years, like you're gonna be 50 years old. Like that will mean that you literally will be nearing retirement without being able to buy a house. That's insane. And you'll have two basic depressions / recessions that happen in your lifetime. And even when we were technically out of the recession in 2012, I mean, I don't have to tell everybody who's watching this show, that is really when we started to get hollowed out. 12, 13, 14, 15, you know, the latter parts of the Obama administration, that is when the majority of the money was, the last parts of the money that in manufacturing and more that we even had here was going away. So the current thing that we're looking at, a downturn in the housing market, which is the real way only that you're going to be able to build wealth, combined with the decline in retirement portfolios and the stock market and all of that, which again, you may not make money on the way up, but you will lose money on the way down because of the ripple effects in the economy. It's really bad. I even look at retailers. We're looking at Target and Walmart. I mean, they're getting hammered because people are not spending money anymore. Like people just don't have disposable cash. And I see it everywhere. Every day I drive home, the gas station is, you know, first it was $4.50, then it was $4.75. Now it's up to $5.10 a gallon, even here on the East Coast. Yeah, if you hunt around, you can find some which aren't too bad. You know, in the Bay Area, in Menlo Park, California, there's a gas station there with $7.75 a gallon. I mean, that's crazy town. So when you consider the just dramatic reduction in disposable income that Americans are experiencing, so on the wage side and then the inability to build wealth, we're looking at a very, very bad picture, I think, over the next decade, unfortunately.
Yeah, I think that's right. And, you know, it'll be very difficult for the Federal Reserve wants to bring us in for a soft landing. That's going to be almost impossible because, I mean, the tools they have are blunt tools. They are, you know, there's a delayed response to them. So it's hard to see any path forward other than pain, which the American people already know. I mean, we've been covering the numbers of 70+%, expecting a recession, saying the economy's on the wrong track, and feeling that they're getting a pay cut every single week.
They know. So, they're not stupid.
Exactly. Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.